Sajjid Chenoy of JP Morgan joins us right now. Thank you so much for joining us, Sajjid. Let me first start off by asking you about what is happening on the inflation front. Morning. It looked like that the numbers are looking slightly more benign now. But if you look at the fact that, commodities are heating up, food prices are actually getting worse in this current month, do you think that inflation is actually going to go down or increase in July?
Well, the July number will show an increase. So I think it's important to step back. I think both things can be true. If you step back to where we were a month ago, the risks on inflation have clearly subsided. You've had oil prices settle down, and the deficit in the monsoon, which is running at over 40%, is now down to about 25%. You've had a government that's doubling down on its fiscal consolidation and maintain the fiscal deficit target of 4.1. All of those things will mitigate the tail risk on inflation, but by no means are we out of the woods as yet. We clearly had a good inflation print in June. What was good about that print was the momentum of core inflation. Month on month, seasonally adjusted, was essentially flat, both across wholesale prices and retail prices. And that's clearly good news for the central bank in its fight against inflation. But as you mentioned, the elephant in the room really is the monsoon. We track high-frequency food prices, and if you look at the month of July, you've seen a nearly 40% increase in vegetable prices. Now, if those food prices translate into the CPI, given the historical relationship between high-frequency food prices and the CPI, you could end up with a CPI print close to 8%, which I think will be a bit of a shock to markets who are expecting CPI inflation to moderate in the secular fashion. So I think the July print could come as a nasty shock. What is going to be very crucial going forward in the months of August, September, October are how do we have normal rains in August? If we have a normal monsoon in August, a lot of these concerns will be mitigated, because really August is the crucial month for sowing. B, how do sowing patterns pick up? We're still 30% below normal. We're 40% below normal in the important crops of oilseeds, pulses, coarse cereals. So I think those are the key drivers here. And C, given that you have a subnormal monsoon and some kind of food price increase, what is the policy response? I think that's going to be crucial. A very effective policy response can result in an outcome that doesn't necessarily have to mimic 2009, where food inflation rose 700 basis points between April and December. So I think all of these factors have to be kept in mind. By no means is the fight on inflation over. I think the July print will show that the food risk shock, at least, is very much present.
Right. Sajjad, you were saying that you're happy with the fact that the finance minister came out and put a target that he's going to stick to 4.1. The numbers, however, don't necessarily add up without a very, very aggressive, disinvestment target. Do you think that can be reached?
Well, if ever there's a year where that could be reached, it will be this year, given that, capital markets have been buoyant, and it will be, I think, politically less sensitive to disinvest at these valuations. Listen, fiscal consolidation is never easy to achieve when growth is as tepid as it's been in the last 2 years. Typically, India has achieved fiscal consolidation when you've had very strong growth, a lot of tax buoyancy, and the consolidation has almost happened automatically. I think what the previous government needs to deserve credit for is that they've achieved very significant consolidation in 2 years in which growth was weak by cutting expenditures, and there were frankly no good options in those 2 years. And that's been instrumental, I think, in bringing the current account deficit down, pushing core inflation down, restoring a sense of macro stability back to the country. So I think it's very important the new government pursue that process, even though the means may not be ideal, and they're having to cut expenditures if the disinvestment proceeds don't materialize. But all credit to the new government so far for indicating that fiscal consolidation is going to be a key priority.
But that seemed to be almost lip service, isn't it? Because if you look at overall subsidies, that has gone up significantly, and there is no sign that it's going to go down. Because what we are hearing from, for instance, the Petroleum Ministry is that our reporters heard that LPG subsidy, for instance, is not going to be reduced. The number of LPG connections are going to be increased. We are not seeing any sign that the government is going to go down the route of cutting subsidies.
No, I think what you mentioned is from a 3-year perspective, it's very important that you have to begin to rationalize subsidies to do two things. One is, as you said, create more sustainable fiscal consolidation, and equally importantly, I would argue, is create the fiscal space for more capital investment of the budget. But I think we have to, understand the political economy of subsidies. We're staring at a drought-like situation in the country. Today, slightly less so than on July 10th when the finance minister presented the budget. I'm not making excuses for the new government, but I understand in this kind of environment where food inflation can be expected to come under significant pressure, it will not be easy to rationalize subsidies. The hope is once we get through this shock and the year goes on, that there be a kind of, there be a roadmap for doing it. So I think diesel has been an invaluable example that if you rationalize subsidies in small, graded, incremental, predictable steps to take the sting out of that, it's worked wonderfully well. So the hope is on the other fuel subsidies that this process carry on. I would also urge the new government to focus very hard on Aadhaar or the UID, because the deduplication benefit of using the UID will, I think, itself result in significant savings on the subsidy front.
Sajjad, you said that the previous government needs to be congratulated, for having achieved a degree of subsidy, trying to reduce the fiscal deficit or keeping it under check. And you were saying that they did it by cutting expenditure because there was no option. In fact, some would say that that was the reason that there is a new government in place. Let me explain that.
What I won't go into the politics of why people voted the way they did.
I'm trying to say is
here's
that
what I will say. I mean,
that the route open seems to be very narrow, given that there are a number of elections coming, important elections coming one after the other, for the government to really consolidate the. You were talking about political economy. That seems to be quite difficult to achieve.
But I'm hopeful because I think if there was ever a moment in which markets would have been quite forgiving of the fiscal deficit target being relaxed, it was in the government's first budget. It would have been quite easy, I think, for the new government to say, for a variety of reasons that you've just laid out, that we'd rather have a fiscal deficit target of 4.5%. And I think markets would have been okay with that as long as they saw a credible roadmap going forward. The fact that the government has stuck to 4.1 tells me two things. That A, it's serious about 4.1. It's unlikely that having doubled down on that target in July, the new government in its first year would want to risk its credibility by revising the target in November or December, barring a big shock, for example. And the second is I think they realize the value of fiscal consolidation, that all of the macro stability that India today can be proud of, a much lower current account deficit, a stable rupee, core inflation pressures that have come off in the last 2 years, in part can be attributed to the fiscal consolidation of the last 2 years. India still, despite the consolidation, has a fiscal deficit above 7% of GDP if you add the center and the states. And that can never be a prescription for growth to revive or inflation to come down.
Sajjid, hi, good morning. Prashant here. I'd just like to go back to the first point. So what do you think the RBI will do on the 5th of August?
I think the RBI will wait and watch. I think the RBI recognizes that, yes, food prices have gone up in July and that's a source of concern. But they've also recognized that the monsoon has improved quite sharply in the last 10, 12 days. And the Met is calling for quite a normal August. I think August really holds the key. If you go back to 2009, the monsoon today is tracking slightly worse than 2009 or very close to. But August was the killer in 2009. The monsoon was 27% below normal that month, and that really threw a spanner in the works of all sowing. So I think the RBI realizes there are risks on the horizon, but the monsoon has picked up. August is crucial, and also that the government here, has indicated an intention to be very proactive. That's going to be crucial. How quickly can we release rice and wheat? How quickly can we import oilseeds and pulses? Because remember, most of the inflation in 2009 was not cereals, it wasn't rice and wheat. A lot of it was pulses and a lot of it was protein inflation later in the year because coarse cereals production took a hit. So I think there are multiple factors at play. I think the central bank will be prudent. There has been good news on the core inflation front last month. There is the risk of food inflation going up. There are concerns about core going up later in the year. They'll be in a wait and watch mode in August.
And I'm just sticking with the RBI, and I'm going to ask you, apart from rates where you think nothing will happen, is there anything else? Because the RBI has been working pretty fast, to put out new norms, operationalize things. We saw what happened with infra bonds and things like that. There are two people. Okay, I think. Okay, Sajjid is back. I thought you froze on air, but. If there are two people who the market really likes to see, one is Mr. Modi, the other is Dr. Rajan Sajjid. So I think 5th of August is important. Apart from rates, anything else you'd be watching out for?
No, I think the RBI has shown a very judicious balance where on the one hand they'd like to anchor inflation expectations. At the same time, they want to do whatever is under their jurisdiction to ensure that the supply push that this economy desperately needs, whether it's infrastructure or other supply-related areas, can be facilitated through regulatory policy. And I think what you've seen is a central bank that's not necessarily just announcing things on these bi-monthly policy dates. Whenever it's possible to form a partnership with the government and ease some regulation or rationalize some regulation, as you just mentioned about infra bonds, that's happened. So I mean, there could well be other announcements in this era, but I think the balance is, let me try and provide as much support to the government to boost infrastructure, boost supply, at the same time, continue this anti-inflationary stance, anchor inflation expectations by reiterating the desire to bring headline inflation down to 8% and 6% in the coming years.
Okay, no, that's fine. I mean, but that's essentially what the RBI would like to do.
As an example, I won't be surprised. I won't be surprised. Yeah, I mean, I won't be surprised if the SLR requirement over time comes down as the RBI is convinced that the government's serious about fiscal consolidation. In a way, you want to reduce this preemption. This is classical financial repression, and you thereby want to free up resources for credit growth, for private investment, for supply creation. So I think that's a theme that I'd expect to see play out in the coming few quarters in tandem with the government being serious about the fisc.
What else in terms of specifics? So yes, SLR is one continuation of that, freeing up PSU bank balance sheets. What else? In terms of specifics, would you like to see or you're hearing could happen?
Prashant, I wouldn't want to speculate. I mean, I think as we've seen, the policy reviews don't necessarily are the best opportunities to load it up with everything the RBI plans to do over the next few months. I think this policy will, in my view, kind of focus on the growth inflation balance, that inflation has come down, but there are risks on the horizon that the central bank needs to be wary of. At the same time, growth is weak. We have a new government that's determined to jumpstart infrastructure, manufacturing, supply, and the RBI needs to be a willing partner. So I think that will be the broad motif of what I'd expect to hear. The specifics, is anybody's guess in the coming weeks and months.
Right. So this is the first policy after the budget, Sajjid, and the budget was underwhelming in many senses. I mean, you were chatting about this earlier with my colleague. I'd just like to ask you, and I think we will hear some lines in the policy on how the budget was, and how do you think they'd sort of categorize this budget? Will they hail 4.1 as a great attempt? It was a big challenge. The government's taken it up, full marks, or you think they could be critical? What's your sense?
No, I think the RBI should be very pleased at what the government's done. I mean, maybe the budget was underwhelming to markets because markets had unrealistic expectations of what a budget could deliver. Remember, a budget is a statement of accounts. All of the other things that we wanted to hear can and should be done outside the budget. I think the budget's most fundamental prerequisite was to ensure we don't have premature easing, which is going to stoke aggregate demand prematurely and stoke more inflation. I think that would have been the first requirement of the RBI, and I think the budget delivered on that. So to the extent that all of us believe the finance minister is serious about that 4.1 target, that will be music to the RBI's ears. The second, I think, prerequisite in the budget was a rebalancing of expenditure. We have to go away from subsidies towards more capital investment, especially because, as we've discussed in the past, even if projects are cleared and regulations are rationalized, it's not clear that either public sector banks or private balance sheets and infrastructure have the space, have the balance sheet space to support a big pickup in capex or infrastructure. And therefore, increasingly, that role will have to be undertaken by the government on the budget. I think on that front, more can be done in the coming budgets. There were some good starting points. The government's devoted some resources to highways, to warehousing. There are some good starting points. So I think generally, the RBI should be quite pleased that you've got a continuation of fiscal orthodoxy. The process of rebalancing has begun. Of course, all of us would like to see subsidies being taken on, more aggressively, but I suspect you'll have to wait for the monsoon to settle down, for the effect of the monsoon to wear off, and hopefully, in the coming months, the government will show the requisite political will to rebalance expenditures even more aggressively.
Okay, fair enough. I just wanted your thoughts on the FI bond limit, the sub-limits which were increased. The overall limit stays the same. Sajjid, what was your sense? And do you think it was? I didn't think it was very significant, or you think it's significant? Because unless, you increase it by a big amount, by 10, 15, 20 billion dollars, does it really make a difference?
Yeah.
What was done?
Not really. I think, as you said, this was, it's incremental. It's not game-changing in any way. It's a little bit disappointing that that the limit that was really safe for long-term investors, pension funds, insurance funds, sovereign wealth funds, foreign central banks, that limit hasn't picked up. Because what we really want is to move away from the shorter duration capital flows and change the investor base to the longer term flows. Now, again, this is not as clean because a lot of people who are really long-term investors still have an FII kind of label, because it's quite difficult, registration requirements are still quite onerous. So really long-term money or long-term investors could still be coming through the FII lot. I think in the grand scheme of things, it doesn't mean much. I think you're seeing a central bank that has increased its FX reserves substantially, so that even if tomorrow there is a global shock and this money has to move out of India. Remember, portfolio flows are notoriously volatile. It was $20 billion of debt flows in a way that put pressure on the currency last summer. But the difference now is you've got this war chest of reserves that you're building up to try and ring fence India from global shock. So if this money were to move out, the central bank has more than enough ammunition to counter that. So I think given all of that, it really wasn't that significant.
Sajjid, do you have any thoughts on the BRICS Bank?
It's more FDI money coming in the coming quarters.
Yeah. Do you have any thoughts on the BRICS Bank and what it can, and it almost seemed like a message to the Western world that, well, I don't know, bring it on, or we don't need you. What is your sense?
Again, I think we have to recognize that the international political economy is changing, and I think a number of emerging markets have made the case to the existing multilateral institutions that those need to be reformed to reflect the new, economic realities. And I think the formation of the BRICS Bank is a manifestation of that. That, the global economy is changing, economic power is shifting, and if the multilateral institutions don't change as a consequence to reflect those new realities, then the new emerging markets will do what they have to do. I think that's all I would lead. And to the extent that, the BRICS Bank were to lead to more intervention, more coordinated foreign exchange intervention, that's unambiguously positive. Those kinds of moves, I think, in the event of idiosyncratic shocks that hit one of the BRICS countries, for example, would be very useful and will obviate the need for any one central bank to load up excessively on FX reserves, because now it has a pool of money that it can access. So I think these are good beginnings, and the underlying message is you also need the existing multilaterals to begin to reform.
Got that. Sajjid, it's a pleasure. Thanks very much for joining in this morning. And we have you back on the 5th of August with us, right?
My pleasure.
Live.
Good to see you.
On the RBI Policy Day.
That's right.
Look forward.